Hi, good morning. This is Mayor Valensky with Driving Markets. We're talking about markets. Okay, very quickly, what we need to get into is what happened last week. So on Friday, US retail sales came in lower than expected. As a result of that, the markets went down. Okay, so US retail sales went down. Now, if retail sales are going to go down, that's going to impact overall the earnings of the US corporates, and obviously going to put pressure on them to cut costs. And one of the biggest costs they're going to cut is, number one, staff, labor, employment, and the other one is the cost of rental space. Now, I want to just discuss those in a bit more detail. As regards employment, if you recall, as you can see, since the ending of the pandemic, the Chinese flu or COVID-19, whichever you want to call it, I personally still call it the Chinese flu, but never mind. There's been full employment. In fact, there's been overemployment, mainly in the high-tech sector and the service sector, where they've had the most, or they've been impacted the most by the pandemic. Okay, so there's a massive shortage of labor in the US and in global developed economies due to the pandemic. Now, that labor shortage came as a result of unfortunate deaths, people leaving the industry, moving to other jobs, and people just leaving work completely and not going back to work. And that had a big impact overall on the number of available staff to work, and obviously the labor market. Okay, now that was great, and there's been a sucking in of any spare labor over the last 2 years, 3 years, since 2020, so the last 3 years. Okay, now there are signs that is coming to an end, and it looks like there is a slowing down of employment and an increase in unemployment, especially in the private sector, and that is causing concerns overall in the economy and in financial markets. Then came retail sales on Friday, which came in at poorer figure or lower figure than anticipated. As a result of that, the markets went down, because poor retail sales is a result of concerns in Joe public as where their money is going to come from, and do they have any stability or confidence going forward. Okay, very important point. So as retail sales fall away, mentioned earlier, the corporate earnings will also be impacted. Now, this is another indicator that the US is going into recession. Now, when we talk about recession, we're talking about an official recession. There's already an unofficial recession, which is not being broadcast because it's not to the benefit of the governments or the central banks to state that there is an official recession. But the Fed clearly stated last week that as a result of the banking crisis, that there will be a slight recession towards the end of 2023. Now, that slight recession will be an official recession. However, we are in an unofficial recession at the moment, with the cost of living going up. Even though they claim inflation's coming down, the cost of living is going up, and that's going to impact overall businesses throughout 2023 and 2024. So we're going to have rising unemployment, we're going to have lower retail sales, we're going to have lower GDP, official lower GDP. All of that indicates a recession. That's having an impact on foreign exchange markets. So the chance that the Fed is going to increase interest rates in May or June is becoming diluted, is becoming a lower event, becoming a lower possibility, because the Fed will not want to increase interest rates and put more pressure on the banking sector, which is going to have a crisis of its own once the commercial real estate begins to collapse, and it's going to put pressure on the householder and the homeowner, and therefore that's going to have a big impact on the economy. So they're going to try and avoid that any particular increased interest rate rises, because the economy will not be able to tolerate any further increase in interest rate rises. So the Fed is unlikely to raise rates any further. There is a view that they're going to raise in the May meeting by 25 basis points. That may be the case, but beyond that, it's unlikely any further rates will move up after May 2023. That brings us on to foreign exchange, which moves on to the dollar. The dollar is likely to continue its downward trend against the pound and the euro, because as rates are likely to move up in the UK and in Eurozone, and the rates are likely to move down in the US, then you're going to have a falling dollar. Gold is likely to move up to the 22,100 ounce level. Oil also is creeping up. OPEC's likely to cut production. You're probably going to have oil at $86 to $88 a barrel in the near future. That's more or less it as far as cryptos are concerned. Bitcoin is well above 30,000. Looks like it's building a solid base there. Not a big fan of cryptos, I want to be absolutely clear, but it looks like Bitcoin is moving up and going to hit 35,000 more likely than not in the near future. Ethereum has already cleared the 2100 level, $2,100 a coin level, and therefore that is the trend. Momentum is upwards, and you can't fight the trend, you can't fight the momentum, and it's not going to replace gold. But saying that, Bitcoin is going to rise further, as far as I'm concerned, in my opinion. Subscribe, share, comment. Can catch me on Instagram, TikTok, and other media channels. Have a good day.